Well, shares of SolarEdge have had a rough first half of the year, down roughly 70%. Bank of America Securities now sees opportunity in the pullback, upgrading the stock to neutral, citing an appealing valuation as the stock is already priced in an unlikely worst-case scenario. Joining us now, Dimple Gosai, clean energy analyst at Bank of America Securities. And Dimple, so it's not that you're positive on the stock. You are at a neutral, but you're less negative on the stock here. And given that 70% pullback, what kind of scenario is the stock pricing in here?
Good question, Julie, and thanks for having me on. So for those that aren't familiar, SolarEdge is a power electronics company. They do DC inverters, they sell optimizers and battery storage systems too. So you're right, the stock is down 70%, underperforming its closest peer Enphase by close to 50%, and the broader solar index by close to 50% as well year to date. I think, the stock is oversold. Investors are largely concerned that we might see the likes of inventory write-downs. You are seeing SolarEdge struggling with things like customer accounts receivable extensions, monetizing the balance sheet, weaker underlying demand. And the question is really, when can these underlying trends really reverse? And so that's the fear in the market. We arguing that the stock here is largely overdone.
Dimple, so you move to the sidelines. What do you have to see to make a buy rating on this one?
Yeah, good question. So one is I'd really like to see the balance sheet. I'd like to see underlying demand firstly improve, because that would mean that, this inventory congestion that we are seeing today, largely prevalent in Europe, were to unwind. And similarly, weaker end demand in US would to then turn, which would really change what we see from the balance sheet. That's the first thing. Secondly, I'd like to see, SolarEdge execute on some of these IRA tax credits, expand US manufacturing, kind of see margin growth here, and with that, the increase in cash flows. So not yet bullish, but looking for signs of incremental growth. And so that's really where we're looking for signs in the second half of this year.
Dimple, I wanted to sort of zoom out a little bit and ask you about the solar industry more broadly, because it's been a lousy year for a lot of these companies. SolarEdge is not alone. I was looking at the TAN ETF, the Invesco Solar ETF, which is down more than 20% year to date. At a time when solar adoption has been increasing, as you said, there are tax credits in the US at least, and in other places that are available. What has gone wrong and what would turn the cycle?
Good question. And I think one is interest rates, the cost of financing, one. The second thing is just weaker consumer demand, especially in the residential solar segment. And then three, tax credits is something that we are seeing companies really take advantage of, utility scale and resi, but we won't likely see the benefits of this until next year, when you can really, include them or get the cash upfront. So that is something that we yet to see the benefits of. So those are probably the three main things that are hindering the sector, I would say. And then there's also the, regulatory policy. So for example, in California, which is, north of 60% of the residential market today, we're seeing policies like the net energy metering policy, or NEM3, which is similar to the Netherlands market, which is really decreasing or has hampered the growth or end demand growth amongst consumers.
Dimple, thank you so much for joining us today. Great chat.
Thank you for having me.